Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to look and see what's being shared on Twitter, on social media. I go in and check Twitter, see what people are sharing. Sometimes there's very valuable things on Twitter, and it seems like, I don't know if it's just focused at me, but a lot of the people on Twitter, in terms of charting, ratios, all that stuff, they're getting pretty good. They're getting pretty good. They're in the sectors that I would be looking at for the most part. I don't know how good their individual stock picking is compared to mine, but that's where there's two things. You got to nail where we're at in the cycle. You got to nail where the value's at. You got to see the technical setups to see what's going to go up, and then you got to pick the right vehicles. So number one is identifying the sector and the setup, and number two is selecting the right vehicles. And it is very difficult to do both correctly. I think the first part's to get the conditions right, because no matter what vehicle you choose, if you have the wrong market condition, you're not going to make money. And if you get the right market condition right, now you got to say what vehicle. And a lot of retail investors choose the wrong vehicle. In my opinion, they take too much risk for not enough reward with the potential of low probabilities of success. You want to maximize risk reward and you want to maximize the probability of success of that occurring. So let's dive in here. Let's take a look. It's going to be related to three topics for the most part: commodities, financial topics, and wealth building topics that I cover. So let's dive in here. Let's see what people are talking about. If you want to follow me at finding_finance, and if you want to join our community, finding-value.com, check the description link below if you guys want a discount and want to join the community. So Luke says hedonic adjustments of U.S. oil production data. Hedonic adjustments are done in the consumer price index, where they adjust a component or a item based off of what they perceive to be more value, and you can kind of adjust it whichever way you like. So the way that they're adjusting U.S. oil production is they're starting to add in natural gas liquids production in with oil, which they didn't do before. So it says U.S. shale production is not suddenly surging. This bearish narrative, we believe, is wrong, has been extremely damaging to sentiment, and is rooted in the EIA's recent inclusion of natural gas liquid production in their weekly reported calculation of oil production. So obviously we've been going on up where the EIA begins to include NGL production in oil, and you can see a vast move higher in this calculation. So it's not really oil production. They're adding more into that production above and beyond oil to make the data look a little bit different, maybe, is why they're doing it. I don't know why they're doing it, but perhaps maybe that's one of the reasons. We've got Kathy here about to get revenge in 2024, and then we put stage analysis on this. Stage analysis is where you get a stage one, which is basically a base. You break out of that base into stage two, which is the big move up. You go into stage three, which is a sideways motion, or a topping pattern. A lot of the times what you'll see is heavy selling on the left-hand side. You'll get a bearish engulfing. There's a bearish engulfing here and a bearish piercing here, and then heavy selling. That was the first kind of large selling pressure wake-up move. It went sideways for a while, treaded water, and then it sold off in that large selling pressure, small buying pressure movement that I would always see in the charts. Then it went back to stage one. This is occurring across the board. We're in stage one again for coal. We're in stage one for natural gas. We're in stage one for a lot of different commodities. So we already went through this consolidation. The consolidation doesn't have to pull back as much as it has done in ARC here. You can have falling wedges. You can have sideways pennants where we go sideways, and it bases or stages out sideways. It doesn't have to be a massive move lower like we've got here in Kathy's ETF or whatever you want to call this. The silver majors to silver ratio tells us all you need to know, and we're starting to break these downtrends in silver ETFs, silver mining companies. Nice little downtrend here. We've broken to the upside. We've got the green army showing up. This is due, in my opinion, to the decline in interest rates and the decline in the DXY. That is what's driving this. Generally, what occurs is you get this inflationary impulse surge that we had in 2020, 2021, and even 2022. Things start to slow down. The cycle matures. And towards the end of the cycle, gold and silver take off. And that's exactly what we're seeing. We're towards the end of this inflationary impulse cycle. And I'm not saying commodity bull markets are done. I'm just saying we have a cycle within a greater cycle. And these guys are starting to come up as that inflation slows down, your interest rates pull back, and things potentially could slow down in the market. Slow down being recession, slow down, whatever it is. But this is starting to creep up, and that is indicative of where we're at in the cycle. So you should be seeing a lot of outperformance potential in physical metals and the mining companies, perhaps. SPY, I'm just tossing a bone to the bears here because someone DM'd me and said to toss a bone to the bears. So here, what if? And what he's looking at here is the S&P 500. We got a massive run up into a bearish engulfing, and then that was your peak and your potential pullback that started this, that big red candlestick that's engulfing the 3, 4, 5 ones before it. And then it pulls on back into a consolidation where you get large selling pressure, small buying pressure, and you've got the pullbacks. The consolidations are in an upward facing. So think of this as a flag pattern down. It based on out, and we're coming back up, and we have another bearish potential pattern here. And this is one that I've been watching. Are we going to get a pullback here in the short term? And how big is it going to be? I don't know, but the S&P 500, I would be looking for a pullback. I know that sounds weird, but I know a lot of people got pretty bullish. They think it's going to go and we're going to get this big melt up, and maybe that is the case. But I kind of think we're going to get a pullback. That's me. But we'll see. We'll see what happens there. It says, how good does this look? Oh my, for the oil and gas sector's quarterly log chart. I'm just going to go back and show you a couple other things. See how big these selling pressure candlesticks are, and then how many days and how small the up candlesticks were to kind of get back to this previous high. And then you can see how it's squeezed up into the corner here. And then we had a bearish engulfing. So all this pointed to was a bearish engulfing, and that's when you want to get out. See you wouldn't want to be in. You had the big, large selling pressure move, and now we're back in it. And notice that the red candlesticks on the right-hand side, notice how small they are, how muted they are on the quarterly log chart. In my opinion, this is very bullish. You can also see that we're above a lot of these big volume nodes where we're kind of sitting on top of support of all the buying and selling, trading, and pressure in the markets here. So as far as I'm concerned, this looks very bullish of a chart because you lack the red selling pressure candlesticks on the right-hand side. And we are above a lot of the high volume where this has been traded. So I think we've got good upside potential here for a blow-off move in oil and gas potentially. Scrolling down, we've got Uselink. He says high correlation when the miners outperform their underlying metals. This is between uranium and gold and silver mining companies. Are these going to move in tandem upwards together? I know people are getting pretty annoyed at the uranium equities not moving with the futures pricing. I'm not getting annoyed. Guys, it doesn't really matter to me. I'm pretty patient, and I'm already sitting on pretty big gains in the uranium space. So if we get the big move up, we could see this also run with GDX, GDXJ, SILJ, those types of sectors. And if they run together, all the better. I'm in both of them. So this is generally the area where you can see a lot of the commodities run together as the dollar drops. The dollar can drop, the uh, correlation and the pricing of all these commodities are priced in dollars. So if the dollar's dropping, the commodity prices go up. We'll see. We'll see if this all rips it together, which I hope it does. Says curious what my two-legged friends think. Is it possible that U miners and PM miners both run hard at the same time, or am I being too optimistic? I don't. I think it's going to run together, guys. I hope that's where my head is at. Risk reward is so good, says Kevin, on the junior gold miners. A lot of people getting pretty bullish on junior gold miners. The junior miners are poking their heads out of a 12-year resistance. Not time to be pessimistic about the industry. That was the right call a decade ago. But look at this thing break the downtrend here, guys. I am really bullish on not just junior gold miners, but silver junior miners. And the metals themselves. I am getting extremely bullish, and I'm putting my money where my mouth is. So I'm hoping that we get some big run ups here, and gold and silver do very well when liquidity comes back into the market. We can also see that Bitcoin and Ethereum have been moving up. I am hoping that the gold and silver mining companies absolutely rip it here for a gigantic move for whatever's coming, and that could be a bailout, a QE, whatever liquidity comes in the market. I don't know what it's going to be that the Fed's going to do. I think it's coming, and that's the why I think it's coming is because gold and silver are starting to move up in Bitcoin. Those are all liquidity measurements. And when liquidity rushes into the system, generally gold and silver basically front run it to some degree, and then also run after, depending on how big the injection is. That move is generally far faster than oil can move with it. Oil is a lagged indicator, or not an indicator, but it's lagged behind the rest. Gold and silver move first, the miners rip it, and then we can rotate over into the oil and gas patch if they were to create a bunch of liquidity. Here's the Permian rig count. So Permian rigs fall to new 2023 low, and here we are about a little under 300, about 305 or 307, something like that. Where does it say? It doesn't say the exact amount, but it's somewhere in there, and it has fallen down a little bit there. And to me, I think this is an opportunity. We're at very cheap prices. I see Warren Buffett's been buying a whole bunch of his Occidental, his Occidental stock. I think he's getting pretty bullish on oil. That means I should be getting bullish on oil, and I've been bullish on oil the whole time. And some of the drillers might be a good way to be playing this as the rig count has fallen quite a bit. SPX, few are prepared, fewer will understand. And this is my concern with the market is this double top potential. I know a lot of people think that the market going up, they're getting all ginned up that we're just going to rip it. And maybe the market does do that. But this pattern definitely looks very possible for a double top. The top doesn't have to be exactly at the same price as the first hump. It could go a little bit above it, do a throw over kind of top. It would be a false breakout, and then it would be a slingshot lower. And the reason I'm concerned is because when you look at where the yield curve is at, and then you talk about rate cuts coming sometime in 2024, this is signaling a potential maybe rounded top at some point over the next 3 months or something like that. But I don't know. I mean, we'll have to wait and see. We'll have to see what yields do. We'll have to wait and see what the yield curve does, and I'll watch it. You guys can watch it with me. The uranium rocket ship has already taken off, and he's talking about the uranium miners' daily log chart ripping above this breakout here in terms of this downtrend line that we've broken. Notice that the price is above the large volume of buying and selling. When you go through that, it acts as resistance. And as you clear it, you go into which is called the fly zone. The fly zone, when you get above all these buyers and sellers, there's not much resistance. And as you encounter less and less resistance, that's what's on the right-hand side there. It's this dark stuff there. There's no resistance up here. When we get up there, it's going to be fly zone where we can really take off and fly. So we've been trugging, we've been coming through this mud. We've been stuck in the mud with all this, the buyers and sellers, which is huge resistance, and we're about to get out of that resistance. So get ready. Get ready to enter the fly zone. It says, you are bullish uranium. Could you please confirm the big UFOMO Friday for tomorrow? Uranium is entering media attention phase with big gains ahead for the miners. And I would say that's pretty much where I think we're at. We just took our big first sell-off. We went through the bear trap. We've broken out, and we're coming into that media attention phase. This is where you get into that fly zone because you're not stuck in that resistance anymore. The doubters are going to start to fall away. Even though there's doubters on Twitter and people believe them, I would not believe them at this time. And I think we could still run. So at least that's my hopefulness coming through. And hopefully we get a big move to the upside. Here's caution. Government spending is getting out of control. Spending as a percent of GDP has hit 38%. This is the highest level since 1964. And that's that fiscal spending I've been talking about. This is what's carrying the market, is this fiscal spending here, government spending. Here's another chart. It says this chart is your best life-changing ticket. Huge global asset paradigm shift incoming. One's life is defined by a few decisions. This is one of them. It has never been more important to be on the right side of economic history. And what he's talking about is First Majestic versus NVIDIA. It's not about the individual companies he's comparing. It's the sectors that he's comparing. If you get the right sector and you get one good ride out of the right sector, you win big, and it can change your life forever. And I'm not talking about big. I'm talking big, not like a 3 or 4x. I mean, some of these could do 20, 30, 40x, maybe even a few 100x is possible if you get into some very cheap ones and are able to ride it. But he says it's a proxy ratio chart for the two sectors. A silver producer, AG, is extremely undervalued versus tech darling NVIDIA. It's a very probable false breakdown of this falling wedge. Generally, falling wedges move upward. And what it's done is given us a ridiculously good entry point for a very probable false breakout. And you have to be brave to buy this, and you have to be patient. I own a bunch of silver juniors down there in 2023, 2024. And into 2024, I'll be buying these silver juniors if they're down there. I've already bought a bunch, so I'll just throw that out there. Expecting it around the apex move, my own term and pattern in this ratio. Uranium miners did 580% in its baby bull move. Still getting started, guys. We just have this breakout here. RSI breakout is broken to the upside. We've got a long way to go in this ratio of URA versus S&P 500. It's a very probable enormous reverse symmetry move coming where we're going to get a very large uranium outperformance against the S&P 500. It's probably going to be a combination of uranium going up in the US stock market, either going sideways or lower. We get ready for the large outperformance where we can buy the S&P 500 out in the future for many multiples more than what we can today. It says, are you watching precious metals? Been watching my posts on gold, silver, palladium, platinum. Been watching how we can play this bull move, and we've got higher move in gold today which is Friday, which I'm taping. But this is looking good and looks like we're starting to break out of gold to the upside. We've got silver's epic cup and handle, 44 years in the making, the gigantic cup and the handle that is about to break to the upside. A new all-time high awaits if we can get and break out of this cluster here of $25 to $28 an ounce. Big opportunity here, guys. It's going to take some time to get this to break and work its way on up, but it's coming. We've got new filing. Berkshire Hathaway bought 5.18 million more shares of Occidental Petroleum over the last 3 days. They are loading up on their oil call there, Mr. Warren Buffett. We've got EWZ, which is Brazilian ETF. It says on a standard candlestick chart, we have broken out, but not yet on the Renko chart. And the Renko chart's just about to break out here. So that's looking good for EWZ if we get a break here, and probably a huge move to the upside. We've got posted this ratio chart. It is SILJ versus SLV. SILJ is incredibly cheap. And this is against SLV, which is the ETF of the physical metal. We are way down there, guys. Look at that. Way down there. We're just breaking out. It says the present move will be epic for SILJ. SLV is broken to the upside, breakout and backtest, and then SLIJ is in a very probable false breakdown and is starting to move to the upside. SILJ could be a very good play going forward. We've got a point and figure chart. It says it's actually very simple. It says, why all the worry? And we've broken to the upside for gold in terms of the figure chart. So this is looking very good for a move higher in gold on the point and figure chart, looking at different ways of charting this. Coming down, it says commodities have been trading within a narrow horizontal channel for more than a year. Whenever we've approached the lower end of this range, it has consistently signaled excellent buying opportunities, and we anticipate a similar scenario this time. So again, we're at the lower end of commodities of this box of the 1-year range. We could see another good buying opportunity. Could there be a breakdown to the downside, a washout sell before we go up? Yes, there could be. There could be a washout sale before moving higher in commodities if we get a slowdown in 2024. It's possible. I'm not saying it's not. So just saying that there. This is SPUT versus the S&P 500 breaking to the upside, looking absolutely bullish as you can be. So that's looking good. It says $1 million question, will the Fed pivot that we got last week trigger a 1970s style return of inflation? It seems that risks of another spike in inflation are driven by higher prices on housing, labor, services, and goods. So he's got this overlaid, the consumer price index, and this is 74 to 82. So we've got the current one overlaid on the 1970s. You can see where we're at. Maybe there's a little bit more downside if it were to match exactly like 74 to 82. But I do think there's another inflationary impulse move coming, and it's going to be caused by liquidity coming into the system. We're going to see Bitcoin take off, gold and silver take off, and that's it front running that liquidity. Then we'll get another surge in inflation. I don't think that the housing market is done being built because we never went into a hyper supply phase. We went into a hyper supply phase in the mid 1970s. This was actually an overbuilt condition. It came down. And then we went into another large boom of real estate, but this was monetary driven. Now it's being more driven by fiscal government spending. So that is a difference. So that's what I've got for today, guys. I'm going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We are doing a question and answer session right now is when we're doing it. So if you have questions, jump on the call, ask whatever you want, and I'll try helping you out, guys. So that's what I've got for today, and we'll catch you later. This is Finding Value.